Hello, this is Will from Will to Trade. This is Tuesday, June 7th, 2016. You can find me at will2trade.com. We have a daily chat room. We talk about stocks, obviously, every day from 9 a.m. Eastern Time all the way through the market and unto the market close. If you're interested in joining our room, just go to the site, fill out the form, and we'll get you all taken care of. I want to talk about stock HMNY. That's stock HMNY. This has had a huge monster move, not just today, but yesterday as well. There's a ton of information I want to go over on HMNY, so I'm actually going to be talking pretty quickly, so otherwise the video is going to be like 30 minutes long. So I'm going to talk as fast as I can about HMNY because there's just so much information to go over. The first thing I want to mention about HMNY is that it is up over almost 1,500 or 1,500% from the beginning of yesterday. Why is HMNY up so much? Because they just announced that they were merging with Zone Technologies, a private firm, which makes smartphone application that maps out crime activity in real time. Zone said it plans to use the Helios data analytic technology in its Red Zone app to monitor social media platforms that help update the app. Okay, so there's the news. The news is kind of interesting. The news is kind of cool, but is the news enough to make a stock move like this from $1 to $15? Well, news is just news. When we trade stocks, it's not about the news as much as it is about the reaction to the news. And when you have a strong reaction to news, coupled with a stock with a very low float, with large volume, a stock has the opportunity to grow exponentially. This is definitely one of the top movers of 2016 so far, with 2016 being about halfway through. We had a huge mover last year, last August, in AQXP. That stock went from about $2 on a Friday to over $50 on the following Monday. That was an even bigger move if you think about it. But who knows? The week is still young. It's possible that HMNY could continue to spike the rest of the week. I do want to talk about the move that it had yesterday and today. I've drawn a bunch of lines in the chart, and I want to go over some of the first lines and then zoom out, take a look at the 1-year chart, explain those lines, and then go back to yesterday and then today on a macro scale and then on a micro scale, talk about support, resistance, volume, where you can buy it, where you can sell it, how to trade it, and the safest places to trade it. Okay, so at the very bottom you see this gold line here at $2. Up here you see another line here at $3. $2 I drew just because it's an even number of $2, and 3 I drew because it's an even number of $3. But more specifically, the first part of yesterday morning, $2 was a point of resistance. Notice here these candles went to like $1.99. They couldn't quite tap $2. And also notice the volume is very small in the $2 to $3 range. When it finally did break above $2, it ripped from $2 to $3 in a series of about a half an hour or so with an increase in volume. Now when we zoom out and we take a look at the 1-year chart, the $2 and $3 marks become even more prevalent. So look at the $2 mark going all the way back here for the entire year. Look at the $3 mark going all the way back here for the entire year. Notice down here in the volume, there's almost no volume at all to be said. This stock really has been pretty dormant and hasn't really done much of anything in the past year. It had a little bit more activity more than a year ago, but in the past year, almost nothing. Notice in the first half of the year, it was between 2 to 3, and then the second half of the previous year, actually below 2. So the stock was really not doing too much of anything. There's a lot of sporadic candles. Again, almost no volume except for this one tiny little red blip down there. And then today and yesterday, huge, massive, big green volume bars and huge, massive, big green candles. So that is the year at a glance. $2, $3. Okay, now we're going to go ahead and scroll back into our view of the 2 days. And we have a bunch of lines here. We're going to zoom into yesterday, and we're taking a look at $2 and $3. And we take a look at $2, and we notice there's very little activity. Once $3 hits, the volume starts coming in. I personally didn't notice this stock until about the 470s or the $5 mark yesterday, because me personally, I don't really like to look at stocks until they have at least 500,000 shares of volume. Other traders may look at stocks that have between 100 to 2 or 250,000 shares of volume and may have been interested in the stock at the 2, 2.5, or even the $3 range. Obviously, you can see it starts taking off in the 2 to 3 range, and then really starts climbing from the $3 range. From $3 to up here at $6, which is doubling from 3 to 6, happened in about 20 minutes or so. Right around the time that we were looking at it first yesterday, it did get halted. Actually, it's been halted a few times in the past couple days, and so trading the stock in and out of a halt, obviously and always, can be kind of tricky. Sometimes it's a sign that the stock would run like this one. Sometimes it's a sign the stock will pop up a little bit and then fall back down. So where would you want to trade a stock like this? Now, obviously, if you look by looking at this chart, you would say, well, hey, Will, it's pretty obvious. I would love to buy right here at $3 and then sell right here at $9 or $10. Okay, yeah, that'd be great. You may also say, well, I'll buy it here at $2, or I'll even buy it at $1.20. Hardy har har. Okay, that's really funny, right? And then you would sell it at $10. Look, you're not going to know down here in the 1 ranges that it's going to rip all the way to the 10s. And even in the 2 range, it's a little bit of a risk because there's just not enough volume here. So even if traders aren't waiting for 500,000 shares of volume, it's a good rule of thumb to wait for volume to kick in because you don't want the stock to be too thinly traded. It's nice that it's up on a percentage, but you also want it to be up on volume, because if you want to go in on 10,000 shares or 20 or 30,000 shares, you want to be able to get your shares easily without the stock spiking too much and be able to sell your shares pretty quickly without the stock plummeting too much. So although it was up on a percentage in this point, it really wasn't a smart trade anywhere below $2. The 2 to 3 range had a little bit more possibility to it, but once it kicked into the 3 range, then it really started to come into play. Now, of course, if you bought anywhere in $3, $4, or $5 price, it will be great. But more specifically, what I want to go over in this video are the key points that I personally think are the safest entries. Sure, you could trade this stock 100 different ways, and now we have the entire chart in front of us, so we know, okay, I'll buy here and sell here. I'll buy here and sell there. I'll buy here and sell there. I'll buy here and sell there, and buy here and sell there, buy here and sell there, and so on, right? You have the whole chart in front of you, so you know what's happening. But now let's zoom in on just the actual candles themselves. Again, these are 5-minute candles, and let's take a look at it as though you're looking in real time. You see the beginning part of the day, and you're interested, but you're not quite ready. You see the 2 to 3 range, and you're a little bit more excited, but you're still not ready. You see a pop above 3, and you're excited, and you think, yes, I want to get in the stock, but I don't want to chase it. I want to wait for a great entry. Now, we have an entry that I personally call an apex point. That's just what I call it because I think it's a great time to buy just at an apex, just before a stock is about to explode. And how do we know where an apex point exists? Well, by my personal definition, it's when the stock rips up as you're watching, and we'll watch it rip up a little bit more, and then it levels off into consolidation. Some traders will draw out a flag. I draw out just more straight lines. It's pretty much the same concept. Traders that draw out a flag may be able to buy in at a little lower price, but the price that I'm looking for is a break of resistance. Okay, so now let's go ahead and fast forward to the next candle, and you see right around here or so, either this candle or the next one, it did get into a halt. So things got a little bit tricky. What do? Is this a safe place to buy? Is this an apex point? No, it's not, because it needs to squeeze up, pull back, consolidate, and then break resistance. That's my personal definition, right? So now it's squeezed up a little bit. Okay, maybe we could be onto something. And then it comes back down, and it comes back down again, or levels off, I should say, again, and then definitely comes down. Now, this particular line is $5.80. This is my definition of what a point of resistance was here in the beginning part of the trade. The reason I have $5.80 is because this candle and this candle peak out at $5.78. This 580 is above this candle, 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 and above the next candle that we'll see, but it's in the middle of this candle. And you may say, well, Will, that's not really a point of resistance because this candle already broke it. Okay, that's fine. But in a 5-minute view, it broke it through its wick. Again, my personal terminology is that wicks are tricks. So even though you have one little wick that breaks through the 580 point, by my definition, it's still a point of resistance. Pardon me. Okay, and again, we have another candle that doesn't break it. So what we can do is draw this line here at 580. And what you'd want to do to trade this thing very conservatively is to scalp it. And by scalping it, you want to jump in, jump out at 10% or 5 or 20%, or maybe 25 or 30, or even more conservatively at 5%. But if you can jump in, jump out, and grab 10%, that's a really great trade. Even though the stock went up like 1,500%, you may say, well, Will, why would you only want to grab 10% at a time? The fact is, you don't know that it's going to go 1,500% while you're watching it. Look here, we don't know how far it's going to go as we see it. All we want to do is jump in, jump out, grab our percentage, and go on to the next. And we want to wait for that apex point. Again, the apex point is when it rips up, it peaks out, it pulls back, consolidates, and breaks a point of resistance. So now we're about to see a point of resistance. Boom, right there. I even highlighted it for you. That's the candle that's an excellent candle to buy. Sure, these candles are great candles to buy too. There's nothing wrong with buying in these candles. Sure, you could buy here, right here at 520. You could buy at 5.10. It wouldn't necessarily be wrong. But when I like to buy, I like to be able to buy just as it's about to break out. That way I don't have to put a really long or deep stop. I don't need to put a stop here or here because that's a big risk for me. I'd rather risk as little as possible, get into the trade, and then immediately it starts to take off. And let's see what happens. And again, 10% up is this line right here, which is $6.38. And look at that, the second candle over there. Again, these are not 1-minute candles, but these are 5-minute candles. So basically in 2 5-minute candles or a 7 to 10 minute time period, it pops up 10%. So jump in, jump out, it's a safe trade. Could you go for more? Sure, you could. You could go for 15 or 20%. Would you want to? Well, sure, you could. And look, that next candle and the next candle. In this range, you're looking at in this range you're looking at 10%, and in this range you're looking at maybe like 15 to 20%. So it just depends on how aggressive you want to be. It's not wrong to go for 15 or 20%, but if you go for 10, it's like a guaranteed safe 10%, and that's our goal here. We want to make the safest guaranteed trades we can, because we don't want to be in a position where we enter the trade, let's say here, right, and then look what happens to the next candle. It goes down, and then it goes down. Now at this point, we would want to just watch the chart. Still just watch it, watch it. Sure, there's thousands of stocks that are ticking away all day long, but if you have your eyes on this stock, you would want to keep watching it because you've already made 10% on this trade and you're looking for the next opportunity, the next apex point. Again, what's an apex point? Where it rips up, pulls back, and then breaks a point of resistance. So it did that, it ripped up, and now it's pulling back. Let's see how far it pulls back. It pulls back all the way here, and interestingly enough, it sort of finds a little bit of a base here on a support line, which coincidentally is 638, which is the top of this line, which is also 10% up from this line, right? It doesn't know that it's 638, but it just kind of fits there, right? So let's go one more. Okay, now it's coming back up, and then, well, it didn't quite, and well, I guess it's not. And again, the bottom of that wick is almost right there at 638. What's it going to do? How is it going to break any sort of resistance? Oh, so close, so close. So I put $8. This is an actual alert that we gave in the room yesterday. $8 would be a great place to buy. Why would $8 be a great place to buy? Because it represents the next dollar up. Here you're in the 5s, and here you're in the 6s, and then it kind of bunches around in the 7s. Sure, you could trade it from 7 to 770. That's a nice 10% move. But notice the 7 to 770 range move isn't as clean as what you're about to notice in the 8 to 880 range, which is an alert that we gave. 8 right there, that's the candle we highlight as the apex point, to 880, which is right there. So in 1, 2, 3 candles, you have another 10%. Sure, you could in theory buy right here at about 750 because it does meet above this candle and all these candles in between. Remember, rips up, pulls back, breaks a point of resistance, either $0.50 or $1. If you trade from 8 to 880, you can get 10%. If you trade from 750, you could trade all the way up here and get maybe, let's say, like a 20%. Notice here it topped out yesterday at $10 and then ultimately faded back. Again, I know I'm talking quickly, but I wanted to go over a lot, and now I need to go over today's action. Okay, so this was yesterday, and again, looking at it in a whole, any place would be great to buy. It would be great to buy at $2. It would be great to buy at $3. It would be great to buy at $4, $5, or $6. But if you want to just jump in, jump out, and scalp it quickly and scalp it safely, in my personal opinion, right at this candle is a very safe 10% gain, and right at this candle is another very safe 10% gain. Okay, now before we slide into today's action, we're going to notice that all these support and resistance lines do carry over into today. $8, $8.80, $5.80, $6.38. Keep your eye on $6.38. Keep your eye on $8 and $8.80. Okay, so now we slide over to today. Looking at the 638, okay, let's actually zoom out a little bit here. Whoops, this is going really fast. Okay, so now what we have is $6.38 from yesterday, like I mentioned. Coincidentally, this is right at the top of the stem. It's just fascinating how these things kind of indirectly work out. So could you buy here at 638? Absolutely. Could you buy at the break of the first 1 minute or even the first 5 minute candle, either the top or the stem from today? Absolutely. You know, anywhere in this area is an area of great trade, because look at that. Again, fascinating, right? To me, it's fascinating. You know, this line here at 638, which was a point of resistance and then a point of support from yesterday, becomes kind of a point of resistance on the top of this stem from today's first 5-minute candle, and then a point of support of today's second 5-minute candle. Do the candles know where these lines are? I don't think so, but it's interesting how they kind of end up fitting where they're supposed to fit. Okay, now we look to the next candle, and it continues to rip. So even if you bought here or here or here or at here, or even if you bought there, you know, you're a winner. Is it 10%? Sure, absolutely. Could you grab 10% right there? Absolutely. From 7 to 770, that's a clean trade. But what I want to show you more specifically than the ramp up trade, is the apex trade, trading at the point of an apex. Again, it's my terminology. And what's the definition? Breaking resistance. Here's the $8 mark, which carried over from yesterday. One of our members remembered 880, had it on his particular scanner, saw that it was just trying right there at $7.99, hasn't quite broken $8 yet, right? Again, fascinating that these candles just kind of seem to know, hey, $8 is a point of resistance. So we go to the next candle, and look at that. One candle over, again, just trying to break $8, but just not able to do it. So let's put an order to buy at $8. Boom, right there. Right there, I don't know if you can see, we've highlighted this candle. It breaks $8. How long would it take to go from 8 to 880? It takes 2 candles, 10 minutes. The apex point, because it doesn't go down after it goes up. As soon as you jump into 8, next thing you know, 5-10 minutes later, you're looking at 10% gain from 880. So now, would you want to buy again? No, 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 no. You definitely would not. You would want to wait, because it still ramps up. You want it to ramp up, pull back, and then break a point of resistance. This is 880. So the 880 mark, or 885, 888, whatever, is a really good place to buy again. So let's see if it does that. Let's see if it pulls back. Oh, okay, well, it went up a little bit more. We're still not going to buy. And now it's kind of finding, again, a point of resistance here around the 880 mark. Not for the top of the wick, but for the top of the stems. Do we want to buy on the next candle? No, we don't. Okay, we're glad we didn't, because now it pulled back. What about the next one? No, definitely not. What about the next one? No, not yet. What about the next one? No, we're not buying right now, because we're waiting for the next break of this point of resistance. That becomes the apex point. And if it doesn't break it, we don't buy, right? Like imagine right here, the stock went up to 8 and then falls back down. Okay, that's fine. We made one really safe trade from 8 to 880. We could have possibly made a second trade from 7 to 770. This is our safest trade, in my opinion. And then we're waiting for another trade, 880. Let's see if it does it. Let's see if it breaks it. No, not quite, 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 not quite. And then boom, right there. Either top of this little wick right here, or at the bottom there. And notice, once it breaks this point right here, this 880, you know, / 885, once it really breaks it, look at the volume kick in, look at the explosion, right? So from 880 up to this mark, it's like already 10% in this one candle. So now let's just zoom out and see this on a slightly bigger picture. Okay, this is today. It ramps up. Again, you can make a trade from anywhere here up to there. 7 to 770 is a nice 10% move. Just clean, simple numbers. $8 becomes that point of resistance. So let's break $8 and then go to 880. Perfect, clean trade. We see it ramp up and then pull back, right? Ramp up, pull back, consolidate, and then we draw our line right here at 880 or 885. It doesn't really matter. And can we get a break? Yes, we do. Boom, it breaks up. So it breaks up, and then it tops out, and it breaks again, and then it tops out, and then it pulls back, and then it pulls back and it breaks that point again. And then we keep running. So you see the pattern happening over and over. Ramps up, pulls back, breaks out. Consolidates, breaks out. Ramps up, pulls back, consolidates, breaks out. And every time you see a circle is an opportunity where you could buy at the base of the breakout, right? And if you want to draw your line a little higher, or even at the top above the high of the day, you could draw your line there as well. There's really no right or wrong answer. But I'll just kind of fast forward to the top of the day. And again, you know, it ramps up, it pulls back, it creates this empty space here. And then right at this particular line is above the top of these stems, and it breaks out one more time. This time is not a 10 or 20% run. It's really only like a 5% run. Once it runs up here 5%, it is pretty much done for the day. Okay, so I tried my best to keep this video as short as I possibly could, and even with me talking as fast as I can, this video is already about 20 minutes. Again, just in really quick summation, I just want to go over really fast about this particular stock, HMNY. It ran so much because there was good news, super low float stock with tons of volume. The tons of massive relative volume with the super low float stock of a stock that's hot, in demand, everyone's talking, everyone's trading, causes it to squeeze up on day one and then kind of rest a little bit back on day two. Squeeze up, pull back, and then squeeze up, pull back, and squeeze up one last time on day two. It's a massive runner. Will the stock run again tomorrow? I don't know. Do I want to see it run tomorrow? Yeah, that'd be great. I would love to see it run to 20, 30 bucks. Why not? Let's go. I think one thing's going to happen for sure. It's either going to run some more or it's going to kind of fade off, because the stock that was, $1 just last week is now $11. Okay, so that concludes this video. I hope you enjoyed it. If you did and were able to keep up, give me a thumbs up. If you loved the video, go ahead and hit subscribe. If you are interested in joining our room and want to get alerts like these and get into a community that is talking about stocks all day, every day, go to will2trade.com, fill out the form, and we'll get you all set up for a free trial. Thank you so much. Have a great day.